Today is our first class, and what we have today is market structure. Market structure. What we have today, and this market structure of the team is very very important because it actually helps you in many things. Gives you that vision of where the market is going to, how to when to know market is tracing back down or market is tracing back up, things like that. And let me just dive in. For example, now market structure is all about the movement of the market. You understand? So trend of the market and we have trend of the market and we have market structure, sorry, external market structure and internal market structure. So these are the three things we are going to talk about today, and I want you to pay close attention to it. And after explaining, I will give you guys room to ask questions. And for now, please, your mic should be off to avoid distraction. Okay, so we all know about market trends. We have the uptrend, the downtrend, and the ranging markets. So what am I talking about? Is something like this. Uptrend. The market keeps breaking the high highs. So this is showing the market is uptrend. The market keeps breaking the high highs, the high highs, the high highs, the high highs, showing the market is uptrend. Understand? So the low is being the one being protected. Now downtrend is when market keeps breaking the low. Something like this.
It's life classes where I exactly what you so life it's max. It is important that you attend every classes. It's not going to kill you. That is all you need for your forest trading. If after this 8th class you still go and pay for mentorship, I'm not saying you're not going to pay for mentorship. You can pay for mentorship to enhance your knowledge. But if you go and pay for mentorship to change your strategy after this whole class,
Sorry about this.
passes the market. So that's it. Any question?
Are you guys hearing me now? Those comments, let me know. Are you guys hearing me now? Okay. Yeah, I'll share my screen. Let me just share my screen. So let's continue. So like I was saying, we have the downtrend, we have the uptrend. Whereby the downtrend is your market is going up and the downtrend is your market keeps going down. So this is going down. Your market is working the low lows. So this is downtrend market. This is a newbie stuff. I want us to take it bit by bit. So this is downtrend market, and I'll show you the uptrend market. Where I want you guys to pay close attention to is about the ranging market, because this ranging market is something that is very important. Let me show you what I mean by ranging market. So basically, ranging market is when you see markets going up and down, maintaining the same range without breaking the highs or the low. Something like this, where you have this main high and you have this low. So what's the expectation? You're expecting market to take out this down or this up. So instead of market to take out this down or up, you see markets going up and down. You understand? So this is just like going up and down. So even if you want to buy or you want to sell, basically you can actually get liquidated. You understand? So in this case now, I would advise you to enter this kind of trade because this is the main low, not being taken out. This is the main high, not being taken out. Both of them is protected. Instead of market to take out the low or the high to show the exact direction of the market, you see markets going up and down, up and down. So basically, this is the ranging market. Let me just show you one example about the ranging market of the thing. Basically, check here now. This place that I wrote down. To watch what happened there, we have the main high and we have the main low. This is the main high and this is the main low. So what happened? Market was just what? Going up and down, going up and down, up, down, up, down, up, down. So in this case, you can't actually predict where the market is going to. So the advice I will give you is to avoid this kind of market. So after the breakout, just wait for the breakouts. After the breakout, then you look for a setup for buy or sell. So basically, what I do trade is trend, uptrend and downtrend. See ranging markets, I do avoid it. Let's just go to the main part of today's class, which is external market structure and internal market structure. Now, talking about this external market structure and internal market structure, this external market structure and internal market structure is something that will give you that vision, that will give you that hint where the market is heading to. You understand? Some of you is having problem with bias, and I think this particular topic can actually give you that hint of how to get your bias on the market. You understand? So please, another thing is start making use of your higher time frame. Avoid the lower time frame. There are times to use lower time frame, and there are times to use higher time frame. And this thing that I noticed, most of you are using lower time frame view analysis, which is actually bad. You understand? Lower time frame is just full of manipulation. But especially, I normally use lower time frame for my picking up my entries and all of that. But you see, my main analysis is coming from higher time frame. Because higher time frame is giving you that clearer view, the bigger structure of everything that's happening in the market. Let's just go into. So external market structure and internal market structure now is what we are going to talk about now. Now, what do I mean by external market structure? Now, when you have this higher time frame of the thing, this is external high and this is an external low. Another external high, another external low. Now, let's use this particular structure as higher time frame structure. Now, when we have this high, which is external high, external low, external high, external low. Now, the question should be, where is the internal market structure located? Now, if you guys know about swing trading, you understand that swing traders normally use higher time frame. And why they use higher time frame is that higher time frame, basically, it will stay long market to take out that particular all-time high. You understand? It's just like a long-term trade. They are not day traders. Just the list are they just move from the market. Now, this is something I do notice from the swing traders. They are using higher time frame. They don't use lower time frame. And now, this is something you need to apply in your own way, using that higher time frame to analyze. And if you want to pick your entry, use lower time frame. I will talk about entry next class, our liquidity and all of that to help you understand this particular topic more. Now, this particular external structures and internal structure. So this is an example of external high, external high and external low, external high. These are external structures now, which is the high highs and like this now. The question should be, where is the internal structures located? Now, internal structures is located inside the external market structure, which is if you go in your time frame, for example, you open 1 day time frame, and you see like this high and this low, this high and this low. Then if you open lower time frame, I believe you will see things like this. You will see structures. You see structures breaking inside the zone, going up. Because in higher time frame, it just be like a straight candle that went up. But in lower time frame, you see a lot of candles that are formed inside this particular structure. You understand? So this particular structure that keeps forming inside the lower time frame when trying to break out the high or forming another low is what we call the internal market structure. And if you check, the internal market structure is what we trade, which is what the day traders, you understand, they list RR, they move out from the market. Now, for example, let me use a swing trader again as an example. For example, now, I'm a day trader, I'm sorry, a swing trader, and market went out to take out this high. This is a bigger time frame. Let's say 1 day time frame. Let's say 1 week, sorry. And this is another low. I'm expecting market to do what? To take out this particular high. Now remember, as a swing trader, you enter from this position and take your TP to this high. This probably can take weeks or months for you to take out this high. You understand? But if you check, we will be day trader. You understand? We will like at least we have a lot of position to enter to take out this particular high. For example, now, if you go in lower time frame, when market trying to take out this high, you will see a lot of market structure. You see a lot of movement, things like this. So these are the things I'm talking about. This particular structure is the internal structure now. Because we take this RR and move on from the market. We can take trade like here and move on from here, take another trade. You understand? See, this has been taken out. But swing traders don't do like that. They just take the trade and let it run out. So this is what I want you guys to understand. This is the external high, sorry, the external market structure, and we have the internal market structure. But there are things, since we are the internal market structure, if you are a swing trader, there are things you look out for to avoid unnecessary losses. Now, I've shown you the internal structures, and there are also things that you should look out for to avoid unnecessary losses, to limit your losses. You understand? Now, let's go into it. There is something we call change of character, and I believe most of you know about it. Change of character is when market shifts and shift a low or a high. For example, now, is it like a change of direction? We just call it change of direction. Some people call it change of character. Some people call it market structure shift. So don't get confused. So for example, the market is going up. Market shift to the recent low. Take out the recent low. This is what a change of character. So we're expecting what? Sell. We're expecting sell. So this change of character is just like a change of direction. Now we have what? We have two types of change of character. Okay. Now we have two types of change of character. We have the major change of character and the minor change of character. Now, the one I want you guys to avoid is the minor change of character. Now, this is the change of character is the same thing, for different position. You see it the different positions, something like now. For example, let me show you the external high, like I told you, the external structure. So change of character, major change of character, major change of character. Like I said, we have major change of character and minor change of character. Major change of character is when market shift an external low. It's when market shift an external low. This is where you can probably say the market has changed direction. Now, the minor change of character I'm telling you guys avoid is the one you see inside the internal market structure, which is, like I told you, when you have this smaller structure, you know that this is another high the market wants to take out, right? Now we are having what? Structures, lower time frame going up. All of a sudden, you see a change of character inside this particular zone, inside what? The internal structure, and not shifting the external low. Like I said, the major change of character is when market shift an external low or external high, depending on the trend. Now, the internal market, the minor change of character is the one you see inside what? The minor change of character is the one you see inside the internal structure. Now, this internal structure, like I said, is the kind of market we do trade. And basically, if you are trading this particular this internal market structure, you do notice something like change of character. And all of a sudden, you want to take the change of character, market take you out. So this I want you to understand. This internal structure, this minor change of character, the trap. Let me draw it out in a good way. For example, now, let me give another example. This is an external high and this is an external low. Market forming another external distance. Like I said, analyze in bigger time frame, and your entries should be in lower time frame here. Now, if you analyze in bigger time frame, you know that this is another high the market will take out. Now, taking your trades in lower time frame, which is internal structures now, you already have it in mind in bigger time frame. That's why I said bigger time frame is very important. You already have it in mind when you open bigger time, the market will take out this high. So if you are buying, all you should be doing is what? Buying. Because there is something the market always do. So this is like going down like this is a change of character, right? But if you want to take the trade and market still take you out. I don't know if some of you have experienced something like you have a change of character, you want to take the change of character and market take you out. Then you keep wondering why. Since it's a change of character. This is the thing I'm talking about. Market is what uptrend, trying to take out this high. And you already see something like that in bigger time frame. So in lower time frame, all you should be doing what is buy, which is the internal structure. Buy. So any change of character you see inside the internal structure is a trap for me. You understand? So I don't take that change of character. Change of character I mostly use is what? The major change of character when market shift and external low. When you see these ones that's happening inside the internal structure, please avoid it. When I talk about the next class, I will explain about liquidity. Then you know how to see this particular change of character. You understand? This particular change of character is always coming back to take out liquidity to continue an initial buy, not a normal change of character you need to focus on. You understand? So this the change of character is always something like trap. Most of you see a change of character. When market is uptrend, you higher time frame, and you take the trade, market just want to go down, all of a sudden still buy. You understand? There is a lot of change of character in the market. Well, which one are you using and which one are you avoiding? Now you are using the major change of character, which is when market shift and external low or external high, and you are avoiding what? the minor change of character, which is what you see inside the internal structures. So what I want you to understand is that do analysis in a higher time frame. So if you do analysis, for example, you do analysis in 1 week time frame or daily time frame, depending on the pair, then you open that particular pair, you see the market is starting to take out a particular high. All you should be doing, maybe going back down in 1 hour, 2 hours, and all of that, taking your trades, is buying. On no account you should take sell when you see a change of character happening inside that particular structure. You are taking trade, which is the internal structures. That's what I want you to understand. More especially, like I said, higher time frame is the key of this. So if you are using higher time frame and having something like this in mind, and also something like this can actually give you that hint of where the market is going to, because if you want to get your bias of the market, you will use higher time frame. Now, I know most of you ask me which higher time frame, which higher time frame. Now, there is no specific time frame for you to do your analysis. There is something you call top-down analysis that will teach you guys, but not now. It's just all about the bias too. Understand? We use multi-time frame, and why we use multi-time frame, because time frame is just all about getting a clearer view of what is happening in that particular pair. You might actually open this particular pair here. Let me open it. Now, this is 2 hours. And if you check here, I want to take this particular trade for sell. For example, the market is already running down and I want to take my entry here. I won't just enter here. You understand? I need to go back down in more lower time frame to get a clearer view of what is happening in that particular cycle inside here. You understand? That's what time frame is mainly used for. So I have to go more down in lower time frame to see the exact thing happening here for me to take this kind of trade. You understand? Okay. Let me explain. Now, talking about that particular external high and I'm sorry, external market structure and internal market structure I told you guys about. Let me just give you some examples. Let's open to, let me just use USD as example. USD as example. Please, I will send another link. Before I continue, I will send another link. Let me just end this one and send another link. 6 minutes more. Just